gave up managing billions to become a better investor. Episode 2, The Rules of Mr. X. Hopefully you've heard episode 1, me talking about my background and basic story and everything else, obsession with the investment and related sector and industry. I thought though I'd talk about some of the early things that I kind of learned in my first couple of jobs. And in company A, the first company I joined after my postgraduate degree, that was kind of intriguing, really. As I mentioned back in episode 1, that was sort of that managed sort of hedge fund assets, and so I would go in and chat and talk with hedge fund managers all around the world, which again was very, very useful thing to do, given they were way smarter than me and kind of interesting people. Nevertheless, I worked out. I remember I was flying back from New York and I couldn't sleep on the flight, and I thought, right, I've got to sort of learn something from all of this. What does all of this mean? Because ironically, you'll laugh at this now, I was keeping all of the notes in my head. Can you believe? I had a week's worth or 3 or 4 days worth of meetings. I was keeping everything in my head. And I thought, Christ, that is crazy. So what I wrote down were actually 3 rules that I've got to adhere to from now on. And it's funny enough, I found them many years later. It made me laugh, but I'll share them with you now. The first was that, and you won't be surprised by this one. The first rule was write it down for obvious reasons. Far better to write things down than keep them in your head, for a long, long time. You will eventually forget them, believe me. So rule number 1, write it down. Not particularly complex, but still a smart thing to do, I would say. Second rule was keep on asking repeat questions. And what this meant was, and I guess this is something which in the investment industry is sort of important, is important in many sectors too. Stuff sort of does happen on a regular basis. Perhaps in the investment space, somebody was buying a particular type of company, a particular sector. They had a view whether bonds were going to go up or down, whatever the thoughts were. And then when you speak to them again, maybe I used to speak with these hedge fund managers every month. So I used to sort of ask them a tough question based on something perhaps they'd said to me a month or 2 ago, see if they were still thinking that, see how perhaps their world had changed a bit or their allocations had changed. So again, keep on asking questions, keep on asking regular questions, really. That makes it even better. So write it down, ask regular questions. The third aspect was be active and not passive. And this has been such a big thing for me. My goodness, when I think about the sort of latter parts of my career, the last sort of 10, 15 years, it's been such a huge influence on me. And it still is, frankly, something we'll talk about in future podcasts to come, no doubt, about the importance of active management. That is the sort of it's not that everything is kind of taught or told to you directly by people. In this case, you had to try to go out there and actually meet them, and not rather than just sort of read a brokerage note or some other expert who'd perhaps met them and gave you a few insights. Whilst that's nice and useful, maybe teaches you something, it doesn't teach you as well as actually going out there and doing it yourself. And believe me, it's something which still sticks with me today in the investment world. The importance of primary research. Be active, do stuff yourself, write it down yourself, keep on asking questions, keep on asking regular questions. And amazing, you put all of that together, life will get better, investment returns will get better. And I guess that's sort of what part of this game is all about. Anyway, that was at company A. When I moved to company B, which was an actual hedge fund, where I was an analyst and then a trainee fund manager, I guess sort of things started to change and evolve a little bit further. All of those initial rules were still very apparent and very, very fair and useful to do. And certainly, I guess, helped my career and helped me keep on making progress. But I also worked with Mr. X, the head of company B. And I remember some rules and thoughts that he talked about, or at least the ones that I wrote down. Undoubtedly, he had many, many more, etc. But the 5 that I noted down that I thought were important, and again, being the sort of slightly boring person that I am, I did write them down, and I did come across them a few years later and thought, actually, that is useful and nice. But again, I'll share them with you for usefulness and everything else. The first one that I remember at least was focused on primary, not secondary information, which was something sort of akin to what I was just talking about a few minutes ago. Primary comes from stuff directly to you. It's not from some secondary source, a broker, and obviously brokers were an influence, shall we say, in the hedge fund world, or certainly people that were trying to talk to you, give you some insights, get your, of course, your fees and everything else from that. So primary rather than secondary insights, super important. So that's, again, still something that sits with me today. Believe me, if all you rely upon are stuff that you can read in the newspaper, something you hear down the pub from a friend or on the telephone, I guess in today's world, online. I know that's kind of ironic given that I'm talking to you on a podcast, but you get the point I'm trying to tell you. You can tell yourself and teach yourself so much through actually primary research. If you want to invest in a company, listen to the conference call rather than just listening to somebody else talking about what they heard on the conference call. I guess that was the first insight. And clearly in a hedge fund, you can imagine how kind of potentially important that was in terms of choosing whether you wanted to go buy a stock, short a stock, whatever else it might be. So that was the first insight. The next insight was in terms of sort of revenue and related, that's useful. But really, what if you wanted to sort of look at a company and think about a company, profits and free cash flow were super important. And that was linked down to this notion of there was always 5 key insights about a company that you had to sort of write down in a way like a summary of what's the most important things there. And what Mr. X kind of told me or taught me was that it wasn't just that a company was growing per se, that it was actually doing something useful within that. And that inevitably comes to the kind of the boring and relevant stuff around profits and free cash flows. And again, these will be sort of a focus of future podcasts when I start talking about how I think about what shares to buy, how I evaluate things, and how I sort of try and work out whether something is interesting or not. So that was the second aspect, 5 key bullet points, but particularly focused on this profit and free cash flow perspective. That was sort of the second point that I noted down. The third point, and you'll laugh about this one, is that the important thing is to be more knowledgeable than 90% of the market. Just 90% of the market. So that sounds kind of impossible, doesn't it? My goodness, how on earth can I be better than 90% of the stock market, given the range of people out there? Obviously, at that point, I was in my 20s. That were probably smarter than me, certainly way more experienced than me. But I actually realized after a while it wasn't as difficult as you thought, because the thing is, too many people, think about those previous points, they were listening to brokers, they weren't doing much research themselves, or they were perhaps interested in other things. So, a combination of those kind of 5 key points of primary rather than secondary research, it actually wasn't as difficult as it would appear or seem to actually be better than 90% or be more knowledgeable than 90% of the market. Now, I know what you're thinking. You're thinking, well, surely if that 10% knows more than you, then why would it still be a good investment or a good opportunity or a way to make money? And of course, the reason is that, of course, it might not be 10%, maybe it's only 1 or 2% or 5%. But the reality is that markets need many people to believe in something. And so the early days of an investment, maybe it is just a few percent of people investing, believing in something, and everybody else ignoring it and looking at other things and stuff like that. But as that evolves and changes over time, suddenly, boom, something becomes more exciting. A share price goes up, a bond yield does whatever it wants to do, gold prices, whatever it might be, whatever part of the investment markets you're talking about and financial areas start moving around in different ways. And that gets sort of very sort of helpful, shall we say. So when you think about it, it really is important to try to know more than 90% of the market through some of those kind of aforementioned ways that I talked about. So that was another point that was made. Kind of The funny point, and one which I sort of smile about now when I read it, and there are various other angles and aspects that we talked about, and I certainly learnt about, apart from all the ones that I've mentioned. But the one that made me smile was the observation, and I did write this down, so I assumed that it was said. But if it wasn't, then it was a wonderful thing to kind of read and to hear. It was said that Mr. X wanted somebody to either be 100% right or 100% wrong. Without that, you're not much use. Now, of course, there's a bit of a joke in there, really, in the sense that obviously nobody is ever 100% right or wrong. I think that was the big insight, really. And we'll talk again on another podcast about what makes a good investor. And believe me, it isn't somebody who's 100% right or even 100% wrong. My reckon is if you beat more than 5 out of 10, you can make yourself a career as an investor for an institution or even as within your own monies and related. But I think what this was trying to say was the key is you've got to be confident in what you think and say. There's no point in saying on one hand, on the other hand, and related. And I realized all of this from something that I also learned the most, if you like, certainly during my early times, my early months at Company B. The thing that was most influential, apart from working with Mr. X and other people there and being in contact with lots of undoubtedly much more experienced people than me, was that we had an analyst come into the office and he'd spent 6 months, unbelievably, looking at one company, and he concluded that the company was a hold. It wasn't a buy or sell, it was a hold. And I remember that moment. It was many, many years ago now, but it still makes me smile, because the thing about that is it showed me again the importance of actually doing your research, of coming to a conclusion. And if it is a neutral, fine, but don't spend 6 months doing it, please. Spend 6, not even days doing it, 6 hours doing it, let's say. And this is where some of these early insights become helpful. Believe me, these 5 key points, these key areas like profits and free cash flow focus, primary research, not secondary research, this is where it all kind of builds up and helps you to be more successfully correct rather than incorrect, even though you're never going to be an always right or an always wrong investor. And kind of when I think about my deeper, more recent career at Company C as an institutional fund manager, and then Company D over the last 10 years, kind of learning, again, back to the original inspiration for these podcasts of how to become an even better investor as I grow older and hopefully more thoughtful and insightful. I still learn from all of this, but I'm still learning that I am still learning, if that makes any sense. If certainly makes me laugh in any case, sort of saying something like that. But that's the way it is. Once again, I've come to try to tell you so much, but I've told you so little, really. But that's sort of how I sort of wanted to talk to you about on podcast 2, about some of the rules and thoughts of Mr. X, but also hopefully some bigger inspirations about how you can quite easily become a better investor yourself just by continuing to work. And obviously over upcoming podcasts, we'll be talking much more specifically about certain tactics and styles and everything else that are important to me and possibly may become a bit more important to you, or perhaps you've got better ways of thinking about it. So hopefully you found that useful and insightful. Next time on podcast 3, I'll be talking to you about the reality of numbers, which sounds a bit boring, doesn't it? But believe me, it is important, despite anything I've said previously about universities perhaps having some interesting views on life, and certainly learning myself that practicalities and sort of thinking quite simply about investments is super important too. But we'll come to that on podcast 3. Thanks very much for listening, and bye-bye.